Hey everybody, Boris. Welcome to the weekly technicals for Euro dollar, dollar yen, and the pound dollar for the majors for November 7th and November 11th. The very, very, very important week of the U.S. election that could either pretty much keep the world as is or turn the world completely upside down. At this point, of course, it looks like Clinton has a small edge, but nothing is guaranteed and nothing is certain. Some of the polling suggested it could be a push all the way throughout. And of course, this year has been such a year of surprises that you can almost take nothing for granted. Several election models have as high a confidence level as 98% of Clinton win. Other election models have only a confidence of 65% of Clinton win. Bottom line is, I don't think anybody really knows exactly how the election is going to turn out. Everything is going to very much depend on the enthusiasm of the other side and how much the other side turns out. As it stands now, of course, if things stay the same, it should be relatively positive for the dollar, and the dollar should begin to rally if there's an inkling of a Clinton win. Anything else, any other scenario that creates any type of uncertainty in the marketplace is going to create massive turbulence. And I think the currency market will be one of the first ones to feel it. So at this point, nothing on the economic calendar, even though the economic calendar is pretty much useless anyways this week, there's really nothing been going on, but nothing on the economic calendar is going to matter one whit if we have a massive political upheaval here, because every assumption that everybody has about where things are going economically will be completely thrown out the window if we even have a small possibility of a Trump win, which would create Brexit times 10, the kind of cataclysm, I think, in the marketplace as far as the implications of the economic outcome of that event. So, looking at the levels, these are really only assumptions based upon the conventional scenario, basically based upon the idea that Clinton wins and we have essentially a focus back on normal economic matters. If Trump wins, all of these things and all these assumptions really go out the window. This is why I pretty much preface and disclaim any of these resistance and support lines, because they could all be shattered completely if we have a completely different scenario as we walk through. So on a normative assumption that the polling, the general consensus view is correct, we should be somewhere around 110, 113.50, and probably the euro will probably creep back up down towards the 110.50 if we have a relatively strong showing by Clinton. Dollar yen the same way, it should climb back up towards the 105s. The one interesting story that we should all be focusing on, just sort of as a side story, is the new resurgence of pound. The pound made some very, very key breakouts last week because the Brexit story got completely derailed by the judicial judgment rendered on, what was it? I think it was Thursday. Yeah, it was on Thursday. Now, it doesn't mean that Brexit is really going to go away. The appeal to Supreme Court comes in December. The final ruling could be January 1, but it certainly has slowed down and put in an institutional block, a true institutional block to this de facto deunification that Theresa May wanted to just basically ram through the UK population. So it'll be very interesting to see. We've been looking for a positive catalyst for cable, and last week we certainly got it. And to me, cable now becomes the shining positive story, at least for the next week or so, because you have this I think right now, best of both worlds combination: a lower currency, which creates a benign economic environment, and enough of a doubt that Brexit is not a reality, that we certainly could have a chance to rally back up, possibly all the way out to 130 before the enthusiasm dies out. So to me, cable relative strength is the story. Buy the dips on cable is the story as we go forward. There just doesn't seem to be anything, I think, to derail the idea of derailing Brexit. In other words, if I could use a double negative, I will. Derailing the idea of derailing Brexit is the bet here on cable that I think is working for the time being. So let's take a look at the charts here and just see how everything sets up. Again, all of this will mean nothing if Trump wins. So I'm just putting out a severe caution that we're basically operating under the normative assumption that we have a Clinton win come Tuesday night. So Euro definitely came off very nicely, by the way, actually off the bottom here. This 108.50 certainly proved to be a very strong support level. But now we're butting our heads against this 1200, 1300 level, and I think this is a much chunkier level. So under the normative assumption that everything in the U.S. economy is going to stay conventional, which means the Fed is very likely going to raise rates in December. By the way, sort of just a side note, I think the chance of the Fed hiking rates should Donald Trump become president of the United States of America is -0, if there's such a thing. Of course, there isn't. I'm just being hyperbolic here. But I think the chances go from 72% to literally 0%. The Fed will be in a completely different panic mode, and it will actually be in a liquidity generating mode, because I think there'll be massive capital flight out of the U.S. should Trump become president. So every assumption you possibly have, this is what I mean about blowing up all the assumptions, could go out the window. Therefore, the chunkiness here is basically based upon sort of a normative assumption that we have, 1200, 1300 as a big break. But a Trump presidency could take us out to 1500 in a fortnight. We could go 3-4 big figures in a fortnight off of any kind of a hugely surprising move. Dollar yen, the shock scenario takes us down to 101.99. And I guess this is how we sort of should think about these things. We should be thinking about sort of normative scenario and a shock scenario. And a shock scenario takes us down to probably 101.99. Normative scenario could bring us back up towards the 105 level. 105 level still proved to be a very tough nut to crack. Although if we sort of stabilize here, and this is the key thing, can we stabilize here for the next 2 to 3 days, not break the lows, then we create a series of higher lows and a stronger upward momentum move here through the 105s. If we can clear the 105s, then of course it really looks like a straight path towards the 107s. So that's the bullish case, assuming everything goes without much of a hiccup. Cable, as you can see on the chart, looks far healthier. To me, cable here is the strongest relative strength trade here. We took out the 25s. This was a critical takeout level post the court ruling against Brexit, or the court ruling to demand a parliamentary vote on Brexit. Those of you who followed me on Twitter at FXFlow saw me forecast the 125, but I guess 12 hours before it kind of got taken out. And the fact that we closed above 125 post relatively decent NFPs suggests to me that cable really has quite more upside to go. 27 is the near-term resist. Ultimately, it's the 30 level. That's the big level from which we broke. Ultimately, it's the 30 level that's going to be the big resist level. But I think for now, you can sort of assume that this 122, 125 presents a very, very serious support. Any kind of a dip here, let's say a little bit of a profit taking back down to 24s, is just going. Cable went from being a sell the rally trade to very much buy the dip trade, in my opinion. And I think any kind of a move down here presents a great opportunity to get long. So that's kind of how the week shapes up. It's really going to be either boring, normative, life goes on scenario, or we're going to be for a massive shock, and next week I'll be trying to dissect exactly what happened. Wishing you guys the best of luck, the best of trading. Boris, over and out.